presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We pick things up 3 p.m. Eastern Time with the S&Ps negative by 15 points right now, trading 23.49. NASDAQ off by 12 points right now, trading at 23,557. You have the Dow off 318 or 0.7% in the red. It's been a one-way trip since we've been at higher prices. Noon on Friday, 45,397. And you got the Russell off by 19 points right now. Bitcoin off about $4,400 right now, trading at $112,440. You jump over to crude, up $1.11. We were as high as $65. Take a look at that. Not the weekly, the daily. You were making quite a run last week in crude. You touched $62. We're at $64.75 right now. You jump to yields, as I mentioned at the top of the hour there. Just below that level, we're trading right now with a 10-year at about 4.28. The dollar with quite a little bid right now, getting back a lot of Friday's action. 98.49 right now. The dollar rejecting lower price, and you got the gold contract right now negative by $4, trading at 34.14. Excuse me. Some of the movers today, those furniture companies. You catch a little bid from the lows. Wayfair down about 5.5% right now. You jump over to Restoration Hardware, down about 5% as well. Take a look at the dailies of those. Yeah. See, well off the lows, but boy, how about from where we were on the highs on a company like Restoration Hardware, right? From $450 earlier in the year, all we've done is fill that gap. That's about it. And we're negative by another $12 today. All right. We jump around to some of the tech companies. NASDAQ just wants to get green right now. We're only negative by 6 points. NASDAQ, the strongest of all the indices, flirting with green territory. You got Amazon well off the lows of this morning from 227. You jump over to Apple shares right now. Yeah, look at that roller coaster. Flat, almost to the tick at 227. Now we got NVIDIA earnings this week. Can't hold NVIDIA down, man. Up by 2% right now. NVIDIA within almost $3 of the all-time highs. Let's take a look at the volume. Some decent volume off those lows. Last Wednesday was a big day. The market was falling apart, and NVIDIA rejected the lows. And you did it with volume. Now, you can't get above right now, but we're coming into the highs. And the earnings event's going to push it one way or the other, but it's trading nicely right now. On a weekly basis, NVIDIA last week, trades lower. Decent earnings. Running into the week of July 28th. All right, jump over to Intel. In focus, of course. Government's got a 10% stake on Intel. And dilutive shares, like 433 million shares. Just dilutes the ownership 10%. Intel, down by 0.8% today. Volatility to the upside last week. And some slight negative action this week as we do get the NASDAQ getting a positive print right now. Let's take a look. Take a look at the market watch. Take a look at the NASDAQ 100 right now. Tesla up by 2.2%. You got Netflix up by 1.5%. Broadcom higher by almost a full percentage point, but NVIDIA hurt today. NVIDIA, 3% of the global market cap. That means, 3%, not of the U.S., not of the NYSE, 3% of the entire market capitalization of the entire globe. NVIDIA. Wow, that's what happens when you're pushing $4 trillion. We take a look at the volume in the S&P. I was talking about this on my morning program. S&Ps, you got a nice uptick in volume, okay? But not above where you were on Wednesday, but the NASDAQ 100, okay, keep your eye on that one, man, because Friday's pop, you had selling on Tuesday, Wednesday, Thursday, Friday, the lightest day of them all. You catch a bid. And remember what's happened. We've had a little bit of a recoil in the dollar. I mean, even yields to a certain degree, okay? Yields get an acceleration of 112.08. We're back to 111.31 right now. But this is not some coming to lower rates moment. Yeah, the pressure is on, man. Chairman Powell, bold statements, okay? But to a certain degree, the market had this priced in. As in right now, we got a yield of about 4.28, maybe 4.29 we're flirting with on the 10-year. We'll jump to the 2-year. But we were at 4.19, almost there on August 14th. We were right there on August 5th. We were right there on July 1st, 4.19. We were at 4.2 almost on 3 occasions in the last, 6 or 7 weeks? And we're not even there right now. With the recognition that Chairman Powell seemed like, they're ready to go. So right now you have about an 86% chance that they're going to cut in September, okay? And with that, the market looking at about when you go to December, 3 meetings from right now, 2 to 3 cuts, weighted towards 2. Something like a 50% chance there'll be at 2 cuts by then, 35% chance there'll be at 3 cuts by the end of the year, and the remaining 15% mostly on 1 cut. So 2 to 3 cuts is priced into this market right now, etching up a bit. But so where do rates go from there? And there's your 2-year. So yes, okay, you get a jump, you get higher price, the Fed is there. But in terms of translating, okay, and mortgages go off the 10-year, not the 2-year. And so all we are is back to where we were last Wednesday. So the market is not convinced just yet that inflation might not be a problem or that the Fed can go on the cutting cycle that some may hope. But guess what? We're going to get to find out, and it's going to be a little bit of potential volatility. But the Fed, they're going to bring it no matter what happens in the short term. So the market's pricing in 2 to 3 cuts. I know we're talking fundamental versus charts right now, but it's interesting, the reaction that you're getting even right now in terms of the recoil, especially in the dollar. That is quite a reversal. The chairman, strong words, they're ready to cut, the dollar drops, and on Monday it's like, nah, we're going to take it all back to the upside. And gold holding up pretty well right now, 34.13 with that in mind. But you jump over that NASDAQ, we'll look for a little bit more volume to take out at least the prior few days. Can't even compete with that. S&P a little bit better. You jump over the Dow, decent volume on the Dow. Look at that, right? You break above all the recent highs. Dow does the most volume we've done since the lows of August 1st. Now on the flip side of it though, everything that happened on Friday is reversing, right? Dow was the strongest one on Friday. Well, Dow. Russell extremely strong on Friday, right? Russell leading the way down with the Dow, both off 0.7% right now. S&P's off 13. Folks, stay tuned. We're coming back with our man Steve Rhodes. Don't go away. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps, negative 17, NASDAQ barely in the red right now, Dow off by 352. And right now, folks, as we do each and every Monday at 3:15 p.m. Eastern Time, we talk to our man Steve Rhodes. You can check out Steve's outstanding newsletter, folks, Mastering Probability, right on the front page of TFNN under the newsletter tab. Don't forget, all the newsletters, 30-day money-back guarantee, folks. You can sign up, whether it's a month at $149. You can sign up for Mastering Probability 6 months for $695. You save 22% or $199, or the year at $1195. You save $593 or 33%. They all come with a 30-day money-back guarantee, and he's got a bunch of great webinars in there for his subscribers, folks. Among the amazing newsletter he does for his subscribers. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing? Good to be with you.
I'm doing well. How about yourself, man?
Great. I was just looking at my calendar and just realized that next Monday is basically the end of summer, Labor Day. Next Monday. Hard to believe.
It is, and it comes so quickly, man. And and not even Tommy. Tommy's not really in school; he's so young still. But when the kids go back so early here in Florida, Steve, yes. I feel like it ends almost so quickly. I'm used to the Northeast; it really ends thing. But like kids are back, the school's back in session. So It's amazing how the summer just flies, man. For sure.
It does. It does. It does. So I thought we'd do today, and this is really kind of sponsored by a post that was inside the Tiger's Den. It was one of our denners, Mr. Z, and he asked Google AI a question about August tops that had declines greater than 10%. In fact, the exact question was, since 1983, very briefly list years in which the S&P 500 reached record highs in the month of August that were followed by a decline of greater than 10% intraday in the next 90 days. And it shot back the following answers. It gave 1987, 1990, 1997, 98, 2015. 2023 was only an 8.5% decline, but it still kind of showed up there, and obviously the unknown is where we at now. So I thought what I could do, what could I do with this data, which was to go back and take a look at the patterns that were present before the declines. So we'll start with the 1987. And if we take a look at on August 26, 1987, the S&P 500, so where my cursor's at, confirmed a Rhodes momentum indicator top. So there was your topping signal. That was August 26, 1987. And the first bottom that we saw was on September 9th. So that top leads to a TD9 count bottom. Again, all these patterns that we're talking about are the patterns that I teach subscribers. These are the workshops that you had mentioned that are available to subscribers as well. That TD9 count bottom takes us to a TD9 count top on October 5th, 1987. And that's when the real waterfall moment when we really got the so-called the 87 crash out there. And interestingly enough, the crash bottoms with that wide-ranging bar on October 19th, 1987, Tommy, with a TD9 count bottoming pattern. You got to love it. So we know that at least that first one that Google gave to us, we had signals ahead of time to let us know that there were problems. Didn't let us know what the depth of the decline might be, but certainly did let us know about the tops and bottoms that took place. If we then fast forward to August of 1990, that decline started with a Rhodes momentum indicator top that formed actually on July 20th out there. And that bottom that was then put in was with a TD9 count bottom and a Rhodes momentum indicator bottom pattern out here. So actually, it was two Rhodes momentum indicator bottoms out there. So again, we did get a warning ahead of time. It wasn't right in August, but it was a July 20th, 1990 Rhodes momentum indicator top that was present before that decline began. Let's take a look at 1997. That started with a Rhodes momentum indicator top on August the 7th. Now, that decline was pretty short-lived. But if we take a look at what then took place, now I know this wasn't the question, but just simply to stick with the patterns that we have out here, October 8, 1997, TD9 count top that forms, that led to quite a precipitous decline out there. So the patterns were present. If we take a look at the 1998 top, well, actually, we can't find a top on July 20th of 1998 when price made that high out there. I can share with you that the bottoms were formed with a TD9 count bottom and a Rhodes momentum indicator bottom. But wait, Stevie has more. If we actually when we go from a daily chart to a weekly chart, what we're going to find is the signal for the August decline in 1998 was a weekly Rhodes momentum indicator topping pattern. And the bottom was put in with that daily TD9 and Rhodes momentum indicator bottoms that we looked at on the prior slide. Here's the prior slide so you can see those bottoms out there. So daily or weekly signals. In 1998, it was the weekly that gave us the actual signal of the top. If we move forward to 2015 and we take a look at the August decline, it actually began with a daily TD9 count top on May 20th out here, all the way back there. We can see that we had two instances where we had rallies that rallied up into that TD9 count top, but never took it out, Tommy, so it was fully active. And then what we ended up seeing, so here I just identified the end of the month for July, and we can see that precipitous decline. So we did have a TD9 count top that was present that said, be careful, beware. 2023, although it was only 8.5% decline for the month of August, if we take a look at the top that actually formed on July 27th, so not a top that formed and that was really the signal out there, that was another Rhodes momentum indicator top, and price moved lower into October 27th when it formed a TD9 count bottom, a Rhodes momentum indicator bottom, and a Wave 7 bottom, part of the Chapman Wave arsenal of tools that are out there. So 3 different bottoming signals, and the top forming a Rhodes momentum indicator top. Okay, so in summary, what I would have to say is that markets can be timed. It's simply a matter of learning the patterns that are present at tops and bottoms. I've shared with you the Rhodes momentum indicator tool, the TD9 count tool, the Chapman Wave tool that was present out there. So Google's good at certainly at AI and identifying those time periods that answer John's question. But I'd say mastering probability, I'd say that's the real intelligence at identifying the tops and bottoms. So let's fast forward to where we're at today. We won't be here next week, so I won't be able to update you on where we're at with regard to September, and we'll find out that's going to be important. But if we fast forward to today, what we have out here is a daily Rhodes momentum indicator top that is present. We also have a TD9 count top. So even Friday's rally did not take that out. Kind of looks like something we just looked at a couple slides ago, where we had an early pattern out there, a top, price rally, didn't take it out. So that is still present. So we've got a daily top. We do not, now that top, by the way, would be negated with a close above 64.8134. So something that folks should write down on their pad of paper and watch during the week. If we take a look at the weekly time frame chart, if we were to see a bearish reversal candle, that would form a sell the D point top. And on a monthly time frame, if we take a look at here, this needs a bearish reversal candle as well, and that would generate a Rhodes momentum indicator top. We've got one top that's present. That's really all that we need at this stage here, which is that daily Rhodes momentum indicator signal. If we take a look at the 97-year seasonal cycle, this is where September starts to get important. The red vertical line is where we're at right now. We can see that in the early part of September, that's when we typically get that seasonal top that takes us down into mid or late October out there. So important for us to take a look at. Ideally as well, the equal weighted RSP and the EDOW, on Friday, those negated their topping signals. So ideally that top, Tommy, will form when we get confirmed Rhodes momentum indicator tops in both the equal weighted ETF for the S&P and for the Dow. So that's what I've got for you. And so I was grateful for John posting that question in there. It really gave me something to really meaningful, I think, to talk about with you for our listeners out there.
I love the breakdown, man. The historical perspective and, history, whether it repeats, whether it rhymes, there's something going on there. So
I do know one thing. There's always going to be a topping pattern. There's going to be a pattern that is out there before we see a decline, and that's the cool thing.
Pattern recognition. I like it, man. Patterns, for sure. Absolutely. Folks, check it out. Mastering Probability comes with a tremendous amount of great webinars, cover a lot of what Steve was talking about there as well, and you get his outstanding newsletter, updates in the morning and at night, weekend as well. Steve, have a great week, man. Great Labor Day, and we'll talk to you in a couple weeks.
You too, Tommy. Take care.
Okay, take care. Folks, we'll be right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's right now. Just kind of a doldrum day. That's a 4-hour. We go back to a 5-minute chart right now, approaching the lows that we had this morning. But yeah, you're talking about only a range of 15 to 20 points right now in the context of where we are. Not that big of a move. S&P is off by 0.2%. VIX kind of saying it all. You know, we're right back to where we were at noon on Friday, when the market was up like 100 points. There is no fear whatsoever in this market right now as you go forward for the next couple weeks, month. Doesn't mean it can't come out of it. We see a few tariff concerns. You jump over to Wayfair, off 5.6%. Restoration, off by 5% right now. You jump over to Tesla shares, catching a bit, up by 2.4% right now. We have the pullback at the beginning of the year, the battle with the president. I believe that was somewhere around March 10th. Was that rip lower? But we are now approaching the highs of May. And that goes back a little bit further even. You see these bars, you're going back to January 2021. We were at this lower kind of trading area. And yeah, about 400 is the high. And that's the highs from 2021 as well. Got briefly above that area earlier in the year. So news this morning, we're talking about Keurig Dr. Pepper. They're buying JDE Peet's for $18 billion. They're going to become the second biggest coffee company out there, right next to Nestle. Nespresso, Nescafe. Keurig Dr. Pepper, lower by almost 9%. They were lower by about 7% when I was looking at them. And yeah. Always amazing how do companies survive? You buy companies that are doing well when you're not doing well. And you look at these charts, just even this year. Okay. But we take a look at Keurig Dr. Pepper. Oh, picking up steam. Down by 11.3% now. There's your 5-year weekly. Let's go back even longer than that. Yeah, I was looking at, look at the low volatility on this equity. See what they say. Yeah, Burlington, Massachusetts. That was the part of the deal I was talking about this morning. When they were coming to market for the first time, which was like 2004 or something. I'll have to look it up. And my dad was on radio stations all through New England. He had the Tiger 1590 in Nashua, New Hampshire. And, of course, he was out in different markets as well. Colorado, California, San Francisco, Texas. And they were pretty geared up that they were going to revolutionize. And, yeah, it was part of being around the New England area as well. I think they bought Dr. Pepper. Yeah, we'll have to check that. Nonetheless, $18 billion. They're lower, though. The market, a little worried about $18 billion, paying that type of money for growth. All right. This one's interesting from the Journal. Going a little bit bigger picture, okay? This one out early this morning. America's newest auto plant is full of robots. But guess what? Still needs the human touch. And yeah, these robotic. Don't get caught in between that room, man, of the robots as they're putting together those vehicles. Hyundai sprawling complex in Georgia illustrates advanced manufacturing's balance between people and machines. So check this out. Deploys 750 robots, not counting the hundreds of autonomous guided vehicles. Okay, so just 750 robots, not counting the autonomous guided vehicles. That stuff's everywhere, right? Amazon warehouses, guided vehicles, that is where we are already. Almost 1,500 people work alongside the robots. That's a 2-to-1 ratio of humans to robots, with the U.S. auto industry average of 7-to-1. 7 to 1 is the average, and this one's coming in at 2 to 1. It's all happening, as they say. But not everyone, okay? Humans are still being required. They spot burrs that must be smooth and bits to trim that need replacing. But as you read it, it all kinds of sounds like AI is coming for it eventually. They snap fabric door panels into place with grommets, push electrical connectors together until they click. You're telling me an AI computer robot can't do that? Duck into places robots can't reach into. Duck into places. Give me a robot with some agility. Now, I say it as in, it's going to be a constant progression of, you just went from 7 humans to 1 robot to 2 humans to 1 robot. And I imagine eventually that ratio is going to be 100 robots to 1 human. And then it's going to keep going from there. But yeah, you're not there quite yet. Robots per 10,000 U.S. manufacturing employees. That's going to keep going. But the employees, yeah, there's your robot dog, Boston Dynamics. I'll post this one in the den because it's an interesting one. All right, check that out. It's coming quicker than we all probably realize. All right, we take a look at NVIDIA. So NVIDIA, out with their numbers this week. We take a look at this share. Let's take a look. And on a daily basis, Wednesday had some decent volume on that bounce. We go back to the action on NVIDIA, and that was the reversal, man. And it was some strength because the market didn't reverse. All right, you check out NVIDIA shares. Wednesday, S&P, a lot of it being driven from there. There were a lot of other equities that did not have the bounce. Now, the market shows it to a certain degree. But here, let's just jump around. Amazon had a bounce, but didn't get it all back, right? You traded from almost 227 to 220, and you got to 224, 223. Let's check out. Microsoft didn't get any of the move lower back, right? You rip lower. And I'm just cherry picking here. I just remember that's what I saw. Look at Apple's rip lower on Wednesday, okay? Google, yeah, they got a nice bounce. They continued higher. Look at Google up by 1.4% today. But NVIDIA got it all back by the end of the day. Man, that's impressive, right? And now we're up by 1.8% going into their numbers. S&P is off by 16. Take a look at that dollar. Yeah, it's not stopping, man. This is something else. Didn't think it would have happened, but it's happening. Dollar getting it all back from Friday right now. We check in on yields. Not happening yet. Dollar's under pressure no matter what right now. DXY, 98.53, but they can't hold it down. It's under pressure, but they can't hold it down. 98.53. Come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We have the S&Ps off by 16 right now. NASDAQ off by 21. We have the Dow off by 316 right now, and the Russell off by 21 as well. And yeah, we got the market just kind of drifting right now, right? S&Ps off by 16, a little bit of selling. But boy, all things considered, I'm just watching the VIX most of all, because the VIX, there's nothing there. Okay, and if there's nothing there in the VIX, that'll usually lead the market. That's just not happening right now at all. You know, the Intel deal is wild, okay? And I found myself saying, so the argument is that the government has given a lot to Intel, and so we will need a piece. Do you think Tesla's gotten a lot? This is like you could go hand in hand. The every big company out there has gotten so much tremendous, and yeah, it's a big number on Intel. But man, you don't think Tesla's got a big number? No one's going for 10% of that company. It makes me, I couldn't, 10% of dilutive shares, and the market just marches on as the government takes 10% of dilutive shares. So politics mixes with everything, okay? But, so now through Trump, because you have Hassett out here saying, okay, that the government's going to look at more companies, okay, and this might not be the only deal, and I'm putting it lightly. So then, if a Democrat gets elected and they endorse the idea that the government should be owning companies to pick up slack where private businesses aren't meeting the demands, because I found myself saying right away, right, the socialist guy in New York is getting a lot of grief for saying like government grocery stores and stuff like that. And because I get the deal that we need chips, right? But to actually take control as an ownership of the government, of private businesses, that you want to steer them down the path of giving them money and making sure that they're doing what you think is the best for the country. What about all these grocery stores that are making a lot of money like Walmart? When we have food prices, maybe the country would be better served if we just owned 20% of Walmart, the biggest grocery chain in the country, because grocers aren't allowing American families to eat healthy and eat the way they need. Not making the case, but it's the same exact case that blows me away when you go how quickly you can make that case into almost anything. Keep that one in mind as this goes forward, because dilutive shares for all these companies, and then you tie it to something like Tesla. Tesla, I was just cherry picking. You're talking about regulatory credits, you're talking about $11 billion. Okay, the amount of grants they've got alone, billions of dollars. But there's no ownership there. So where's the line and who gets what? And that's why crossing that line is a brave new frontier. And so what's going to happen is you're going to have the case be made, and only Trump could make the case, right? And so now the case is going to be made that, yeah, you're right, we should own all these companies and make sure. What about the banks? I'm being real, right? Banks are making more money than God. Maybe we should own some of the banks. Why not? All right. Let's take a look at some of the banks. Speaking of. Intel's pretty remarkable. Intel's, a $100 billion company. And 10% dilutive shares. You just wake up one morning and it's like, they made a deal with the government. They gave them 10%. The government said they wanted 10% and they gave them 10%. That didn't used to be a risk that investors were waking up to. All right, Bank of America coming right back up to these highs of 2022. Check that out. Let's take a look at the monthly. Just look at the type of volume we were doing the last time we were up here. About 1 billion shares coming in at 906. Couldn't quite get above it. All right, we'll see if we can get the volume, though. We're only at 5. We're not going to have the volume here. Check this out, right? Bank of America can make highs initially on 917 million. You trade a little bit lower on 895, and you get back up there and make the highs on 1.2 billion and 941. Well, this is the last week. Yeah, because we're closed from Monday. This in 4 days, and we're only at 571. And you're probably going to break above it. So you break above the highs. And look at that. What do we got? We got highs of 50.08. We're at 49.64. Take a look at the weeklies on these numbers. Well, it was a big day on Friday. Yeah, you broke above these highs and you did it with volume. Check it out. On a short-term basis, that's bullish, but longer term, keep your eye on that monthly because it's not really getting the type of volume when we were at those highs last time. But on a daily basis, yeah, that was big volume. 45 million shares, Bank of America. You break above the highs of July 24th and July 2nd, both big days with volume. Paramount Skydance, flat right now after volatility and meme action last week. We jump over to Warner Brothers Discovery, negative by 0.4. Netflix in the green today, up by 1.25%. Checking on some retailers. TJX, backing off on the top of that channel, down by 0.6%. Mickey D's, slightly in the red by 0.3% today. Coal shares on the flip side, up by 0.8%. JetBlue, a little bit of an acceleration from that 420 area, 430. We're bumping up against this high from May, though. Look at that, right? Down 2.4%. Check out the airlines. Delta, off by 1.7. United, off by 0.5%. American off by 4.1. Let's take out the home builders. Lennar. Yeah, quite the surge higher on Friday. All right, that's good to see. As in they trade dramatically higher Friday and only a slight give back today. KB off 1.4%. These equities are up 5, 6, 7% on Friday with lower rates in focus. And I was saying in my newsletter today, there's 2 to 3 rate cuts in this market right now, okay? So in the short term, don't expect yields to collapse, especially as you go a little further out. The 2-year, Yeah, we've had quite a pullback, okay? There's your 5-minute action. There's your acceleration. We'll jump to the yields in a moment. But there are a lot of cuts already priced into this market right now. And we need more cuts to get even further, but the pressure's going to be on. New chairman coming in May no matter what, and we'll probably get 2 to 3 cuts before then at least. One more segment, folks. Stay tuned. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 19 right now, trading at 64.64. NASDAQ off by 31. You got the Dow off by 322. All the markets giving back some of the action from Friday, but the dollar in particular in focus. Quite the surge higher on the dollar, as you were pushing a price level right now at 98.50. We'll call it all the way from 97.50 on the lows of Friday. You jump back to yields in focus. 10 years at 111.31. We're off by 6 ticks right now. And that correlates to a yield of 4.28. And you jump to that yield curve. And yeah, on the 2-year, up by 4 basis points. You take a look at that 2-year for a second. And yeah. So I don't know what's going on with the charts, but that's what I assumed. On if we just got a rollover or something on the contract, you jump over this ET on Sunday night. But we have a give back, okay, even on the 2-year. As in your 2 years at 373, folks, we were at 373 5 days ago, okay? And you look at the cuts priced into this market right now. And I'm not saying that the Fed's not going to cut. What I'm saying is the market had already priced in these cuts. The chairman confirmed it. The market took it. But I think the market's now saying, hold on a second. We knew that was coming. 84% chance we're getting a cut in September. I would argue that the odds are higher, at least right now. We can always get a surprise in the data. You go out to December, 48% chance we get 50 basis points of cuts by then. 32% we get 75. So it's an 80% chance we're getting 2 to 3 cuts by December. That's in. Folks, thanks so much for tuning in, ending your trading day right here. Have a great night. Have a safe night. We'll see you back here at 9 o'clock tomorrow morning for the morning market kickoff. Have a great one, folks. Thanks so much.
Building wealth trading